the show. This channel is sponsored by the XX Network. I have no finance background. I am not a financial advisor. There is nothing new in the world except the history you do not know.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
It's become increasingly clear that money is losing its meaning. Prices are rising, wages are stagnating, and the wealth gap is expanding. For many of us, money isn't as meaningful as it used to be. We often hear the concept that this is a fiat standard, but it's not entirely a fiat standard. Oil is priced in dollars. We have a petrodollar system.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
As oil and other commodities are priced in dollars, every country has a need for dollars, which is why the US dollar is the top currency. The demand for dollars creates a disadvantage for countries that don't produce oil or who aren't part of the United States. The global financial system has evolved with the dollar at its core, making it the foundation of international commerce.
Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
During the early 1970s, France attempted to collect gold from the United States via a warship to New York Harbor. This action caused England to follow suit. In order to prevent other nations from collecting their gold, Richard Nixon suspended the gold window. As a result, the United States robbed everyone of their gold, causing the start of a fiat standard.
Do I have to sign in Arabic now?
Yes. Sign is also signed in English.
In the 1970s, oil production was cut by OPEC countries. They placed an embargo on oil exports to the United States. Henry Kissinger negotiated a deal with the Saudis whereby oil would be priced in dollars. This is known as the petrodollar standard. The Saudis agreed to reinvest those dollars back into American markets or hold treasuries, and in exchange the United States promised to protect and sell weapons to these countries. Now all nations need to sell their exports for dollars in order to purchase oil.
The Iraq War was perceived by many as a move to have total control of the oil resources in the region and secure Washington's dominant role in formulating global energy policies. In October 2000, Saddam Hussein moved to switch Iraq's oil trade from the dollar to the euro. But the U.S. invasion of 2003 set the country's oil industry safely back into dollar denomination.
The dollar has an advantage over every other currency because every country needs dollars to consume energy. This was especially true in 1970s to 2000, when large economies like China were industrializing. This led to energy consumption, which in turn increased demand for dollars. Anyone who opposed the petrodollar standard, like Gaddafi or Saddam Hussein, faced severe repercussions.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
OPEC's decision to cut oil production in 2008 was a major contributing factor to the global financial crisis. By reducing supply while demand remained constant, they caused the price of energy to increase, which eventually broke the back of the economy. When energy is expensive, businesses stop producing because it's too costly to operate. Russia is another large energy producer that supported OPEC's decision to cut production.
And affordable energy. And to ensure that we keep our commitments, we agreed to continue to take stock of our efforts going forward. Now, we have learned time and again that in the 21st century, the nations of the world share mutual interests. That's why I've called for a new era of engagement that yields real results for our people, an era when nations live up to their responsibilities and act on behalf of our shared security and prosperity. And that's exactly the kind of strong cooperation that we forged here in Pittsburgh and earlier this week in New York. Indeed, on issue after issue, we see that the international community is beginning to move forward together.
In response to the 2008 financial crisis, President Obama gave a speech at the G20 summit calling for a refocus on balanced growth. Countries like China and Japan need to move away from capital investments and towards consumerism. Europe from exports to investments, and the United States needs to increase its exports. For the U.S. to increase its exports, we need a weaker currency. By devaluing our currency, U.S. dollars become cheaper and importers choose U.S. goods over those priced in other stronger currencies. However, this has not happened yet. The dollar is stronger than ever because of the petrodollar system.
Oil prices had one of the biggest ever falls on Monday, taking the price of Brent crude to nearly $30 a barrel. Behind this was an effective collapse of an agreement between OPEC and Russia to enact production cuts to support the market. Saudi Arabia, OPEC's de facto leader, wanted deeper and more prolonged cuts to counter the effect of the spread of coronavirus on demand. The International Energy Agency said this week that oil consumption is expected to contract this year for the first time since 2009. Despite this, Russia did not want to team up with OPEC, believing the bigger cuts to production would only propel rival US shale producers. So what happened next? Saudi Arabia started a price war. Even as the world requires less oil from global producers, the kingdom said it would put another 2.6 million barrels a day into the oil market. This triggered a tit-for-tat response from rivals. Russia said it would add more oil into the market, and so did the UAE. It's the first time since the 1930s that we're seeing such a severe demand shock, now combined with a supply shock.
OPEC Plus, which is Russia and OPEC, had a disagreement about production levels. This led to an oversupply of oil in 2020, resulting in negative oil futures. With little demand due to lockdowns, producers were pumping more oil than necessary, leading to a market turndown.
And Brent or West Texas Intermediate. So that differential is increasing significantly. That is bad for Russia, but nevertheless, the increase in prices is very good for the Russian budget. So that is affecting the discussion about an embargo, because if you keep talking about an embargo, you drive prices up. And then if you do not implement the embargo, that is creating a benefit, larger import amount for somebody like Russia. So that is a negative situation. So I would suggest that there needs to be a clear agreement on whether there will be an embargo or maybe a stage embargo, a reduction in the amount of purchases, and that is implemented simultaneously by the US and the European allies, because all this talk about embargoes with no embargoes simply drives up prices and benefits Russia, which is exactly what we do not want to do.
The Russian sanctions had a significant impact on energy prices. The sanctions were really strong, freezing the Central Bank of Russia's account. However, energy was not harshly sanctioned. This caused a chain reaction and led to over 10% CPI. All central banks adjusted to the increase of energy prices by tightening monetary policy. Russia could easily cause disruptions in the entire system by pricing their oil cheaper than OPEC+. Yet they haven't done this. They're sticking to OPEC+ pricing. When you realize that everything is based off of energy prices, you can see how politicians and geopolitical moves are not what they seem.
You may have noticed that oil prices are up again. It's not because of any new disruption. It's not because of fresh escalations in Ukraine. It is because oil producers deliberately made that choice. I am talking about OPEC and its allies, the cartel of oil-producing countries. They held a meeting in Vienna on Wednesday. It was the first in-person meeting since the COVID-19 pandemic. Most experts were predicting an output cut, and that is exactly what it did. They agreed to slash oil production by 2 million barrels per day. What was their justification? Apparently, to stabilize the markets.
Our priority now is stabilizing market. Now, we could be accused of wanting to influence market in a negative way. That's everybody's prerogative. You and others will see how we conduct ourselves in the months to come.
Although some people speculate that the Middle East is intentionally trying to cause problems, this is not true. They're simply looking at the economic data that reveals that we're in a recession. Less oil production is due to less overall growth. Recently, the Middle East has cut oil production, and politicians are using this as ammunition against Middle East's alliance with the United States.
President Joe Biden has repeatedly said now that there will be consequences to Saudi for this deal without revealing the details. Now, we do know that many congressmen and women are threatening to freeze arms sales to the kingdom, to pull US troops from the kingdom, to limit OPEC's influence on the markets going forward. Does that worry you? What's the risk involved?
The U.S. is threatening to remove troops and to stop selling arms to the Middle East. That would not be holding up our end of the bargain.
Israeli planes over Saudi Arabia. We got movement in terms of how we would deal in the Middle East with aggression from Iran. But it wasn't, there were eight other parties there. It wasn't about oil.
Okay, but
But we should, and I am in the process when this House and Senate gets back. There's going to be some consequences for what they've done with Russia.
What kind of consequences? Menendez says suspend all arms sales. Is that something you'd consider?
I'm not going to get into what I'd consider and what I have in mind, but there will be consequences.
There will be absolutely no consequences. Zero. The potential unraveling of the petrodollar agreement could have serious implications for the strength of the dollar. This agreement is a key factor in why the U.S. has the economic power it does. If the U.S. were to politicize oil and undermine this agreement, it could spell the end of the dollar as a reserve currency.
It's clear we're at a point of disagreement. And obviously that comes from the decision of OPEC Plus to cut the production of oil. And I would have to just remind people it was a decision made by 22 countries based on an economic survey that understood that there's going to be a downturn. Many people have tried to politicize this, but you're hearing it from the horse's mouth. This is not political. This is purely economic, based on the expertise of 40 or 50 years of mapping and trends. We do not engage in the politics of anyone. We engage simply as a balancer and a stabilizer of the economy through the energy market, as we've done historically.
The recent OPEC Plus production cuts will cause the price of oil to increase, which will strengthen the dollar. Russia is selling oil at the same price as OPEC Plus, which means they're getting more money for their oil. Russia is accepting ruble, gold, and they've mentioned accepting crypto assets as well. The U.S. sanctioning Russia is really shooting ourselves in the foot because the oil that they would sell would normally be priced in dollars, but we cut them off of our banking system. Although Russia is sanctioned by SWIFT and other payment rails, their energy isn't sanctioned. Countries can purchase energy from Russia. Countries like Germany have no choice but to do so. This is a fundamental shift.
China has a vast consumer market, complete industrial infrastructure, whereas the Gulf Arab countries have an abundance of energy resources. Economic diversification is in the ascendant. The two sides are natural partners. China will continue to import large quantities of oil from Gulf Arab countries and expand imports of liquefied natural gas, strengthen cooperation in upstream oil and gas development, engineering service, storage, transportation, and refining. China will also make full use of the Shanghai Petroleum and National Gas Exchange as a platform to carry out yuan settlement of oil and gas trade.
China has proposed a strategic partnership with oil-producing nations. Under this partnership, oil would be settled in yuan and invested in Chinese companies. This move would undermine dollar hegemony. However, OPEC nations have declined the yuan settlement. Countries like Saudi Arabia would have vast amounts of wealth. If it was in yuan, they would need to reinvest into China's markets. China has capital control as well as a long history of devaluing its currency through manipulation. This is why it was declined. The money is constrained and surveilled, therefore untrustworthy.
Xinhua News Agency then published the Chinese version of the joint statement of the Gulf Summit, but there was no content on the renminbi settlement. The countries participating in the Gulf Summit, in addition to Saudi Arabia, also have the United Arab Emirates, Bahrain, Oman, Qatar, and Kuwait, all of which seemed reluctant. At a subsequent China-Arab States Summit, attended by more Arab heads of state, Xi spoke again, but made no mention of renminbi settlement for oil and gas trade. The post-summit statement was also silent on the issue of whether China-Arab oil and gas trade would be settled in renminbi. This means that there is no substantive breakthrough on the matter. The Chinese media, caijing.com.cn, reported that the oil trade is heavily influenced by geopolitics and that the renminbi settlement will challenge the status of the US dollar. In the current complex geopolitical situation, making a breakthrough is not easy. That is to say, Xi brought 34 investment agreements with him when visiting Saudi Arabia, expecting an exchange for settling oil in renminbi so China could suppress the international status of the dollar. As it turned out, the investment agreements were all accepted, but China's request for renminbi settlement for oil was rejected.
The petrodollar standard is currently being upheld, but there is a risk that it will be undermined by U.S. political maneuvering. If other countries are successful in convincing Middle Eastern nations to price oil in currencies other than dollars, it could have a major impact on the global economy in the years to come. Russia has already agreed to accept China's yuan for its oil, and this could be just the beginning of a larger trend.
We look into all other central banks' proof of concept, including Jasper, UPIN, and others. And those were looking into one fiat currency, and even in most of those conclusions, we didn't see like a high value out of doing it because the local, the ACHs, the local RTGs, the faster payments seems to be very efficient when it comes to the local payments. However, we see there is still high friction when it comes to the cross-border. And actually both of our experimentation projects, including Ripple or this project of proof of concept with issuing digital currency and using distributed ledger, are in this area of cross-border payments and international and different currency settlement.
Okay. The partnership between Ripple and the Saudi Arabian Monetary Authority is an interesting development considering their role in the petrodollar system. By utilizing assets like the XRP ledger, all forms of value can be exchanged. Crypto assets are protocols of value, where anyone can issue anything of value. It's global and accessible to everyone. The US dollar as a payments currency could be removed. The US markets won't be removed. It's the only market on earth that could support billions in liquidity. Even as I record this, the entire cryptosphere is paired to dollars through stable coins. If we move to a crypto standard where payments can be made by anything of value, the underlying markets are still dollar-based. Speakeasy is a social media dApp. It's private, decentralized, and quantum resistant. That means that your channel as well as your personal data is protected. The NSA has been caught collecting our data, and at one point they'll be able to decrypt our encrypted messages using a quantum computer. Messages are sent through the CMIX protocol, which breaks up your data and mixes it amongst hundreds of nodes. CMIX is currently being tested by the nation of Switzerland for their central bank digital currency project called Project Tourbillon. Test it out for free at alpha.speakeasy.tech. I hereby find that the defense of Saudi Arabia is vital to the defense of the United States. Thanks everyone, I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon.